All right, let's get started. Thank you, everyone. I'll be moderating again. This is my last one for the day. Thank you for tuning in. We have two speakers here today, just as introduced. Let's get started. So we'll start with April. Thank you for being here on the panel today. First question is all about investing in startups that address social and environmental challenges in Southeast Asia. I'd love for you to share what those key opportunities are and how you guys measure those impacts.
Yeah, thanks for having me here in the panel. And yes, at Quest Ventures, we've actually been in the business of supporting startups as an early stage venture capital firm out of Singapore. And we looked into, driving the digital economy in Southeast Asia. And you're asking about what are these, let's say, social or impact-driven startups that we've supported. I think in the early stages, it was really not as direct or deliberate to look into, let's say, education or agriculture and things like these, because essentially the digitization or that transformation that technology has brought to these sectors has already made that impact, right? So I think the opportunities that we're looking into now, of course, is aligning also with sustainable development, looking into how the impact can be made both on the environment and people. And actually we have engaged with different programs, accelerators, and those focused industries that look into these areas. And then from there we can come in, since we're actually sector agnostic. So we actually try to look into green tech and climate tech all the way to agri-tech and health tech. So we actually do this already from the get-go, especially in digital transformation, but now more so with the intention of looking at the impact areas of these startups.
Okay, very good. And just another question over to you while we're having you share about these key opportunities. Would you say that there are enough opportunities in the space to invest at scale in Southeast Asia quite yet, or is it still very much an emerging space?
I think it's a different way of looking at it, because we do see that there are a lot of development areas that needs growth, that needs acceleration, that needs technology to disrupt. So I think that's where we see as the continuous, let's say, emerging market or emerging, let's say, sectors. But when it comes to, of course, technology startups and these innovations, it is still picking up and growing, especially to look into these more intentionally. So I think we have a handful already, I think in the introduction earlier of this panel, we are riding the tide, right, of sustainability and having more companies look into these areas. So I think the startup ecosystem, the VC ecosystem, is now also trying to be active in that space. So hopefully there is that convergence of these industries, whether it's startups or even, let's say, traditional sectors in these development areas to actually work together.
Okay, and over to our next panelist, Wern. He is the Director of Strategic Development at Malaysia Venture Capital Management Berhad. It's a state-backed fund. How are you guys seeing opportunities in this space, especially from a government-backed point of view?
Yeah, so we are a fund-of-fund outfit. So we basically look into funding other fund managers as well. So we have VCs under our portfolio. And in terms of impact investment, we really want to push that agenda forward. And we look into Malaysia as well. Malaysia is a country that has committed into carbon neutrality by 2050. And there's a lot of effort that's going into building that trajectory and making that happen. So what we've done recently is that we look into how we can actually implement an ESG framework towards our fund managers as well as their portfolio company. Yeah, given that a lot of our our fund managers do have their own ESG framework, but it's everywhere. So if you look into Malaysia, there's a lot of framework. There's IESG, there is a sustainability reporting framework as well. There are many others. So I think a lot of our portfolio companies feel scared or threatened in terms of, should I be part of it? How do I be part of it? Would it be something that is so cumbersome for them? So what we've done, we've taken all this feedback. So we've run a few workshops as well, and we developed an ESG toolkit. So that toolkit is supposed to help our fund managers if they don't have a framework among their portfolio company. So we use that toolkit to assess where all these portfolios company ESG journey is. So it's not to look into whether they are wrong or right, but we just want to know where they are right now so that we can further improve their journey in ESG. And that toolkit is available on our website right now, and anyone can actually use it. So with that, they can assess where they are in their journey, and we can help them to create more value in their ESG trajectory. And I always say, ESG is not a framework. ESG is not a theory. ESG is always a practice. So you have to practice every single day in what you do in the E, S, and G component of it. And once you get that on board, it's like your daily life, isn't it? And you know what to do, and you know what are the elements, and you can actually articulate that better as well. Just to circle back to portfolio companies, many of them already have somehow like a impact element in their businesses. It's just that they don't realize it yet. Right? Doing assessment of it, they will finally understand, oh yeah, I'm actually creating impact in my business itself. And you can take that impact and put it as part of your sustainability framework. You can put it as part of your value proposition as well. And that could actually propel you to be, better in the future and get, better funding, but get better growth and so forth and so forth. Right? So I think that's what we've done so far. And we are looking into creating a much more holistic kind of practice that everyone can actually adopt it quite easily. And it should not be hard. I think we do want to make impact investment or ESG something very difficult to take on board.
Yeah, I think you touched on a good point because I represent a startup myself. It could seem a bit complicated. But I think the easiest way to just formulate it is like, hey, it's good business. You can make more money. You can make more profit. I mean, it just business comes down to like generating value at the end of the day. So I guess my follow-up question to you, Wern, and over to April would be, what are you guys doing to just make it more like accessible and easy for startups to understand that this is good business, not just a checkbox, but is rather like helping to drive value? So for instance, maybe I'm a startup, I'm pitching to, in this case, Quest, because it's a VC. Is this something that you guys consider in your investment committee? Like, hey, is ESG and what are the elements of that, like impact and purpose, something that young people care about? Is that actually an attractive, I guess you could say, I don't want to say checkbox, but almost something, a green flag you could say for the IC. So I'll start with April, then Wern. Yeah.
Sure, no, we were chatting about this earlier as well, and maybe just to echo what Wern said about it being, let's say, ESG as a practice or as an approach, and I also say this when it comes to like impact investing, that it's not like a separate asset class that it's impact startups and that's it, but it's really looking, as mentioned earlier, all these different sectors wherein you can actually create impact and, as you call it, value and both financial returns, but also adding to that these considerations on environment and social impact and of course governance. So I think when you say about like a checkbox, right? So earlier I mentioned that it wasn't necessarily like already in the get-go being part of that, let's say, checklist of startups that come to us for investment. But I think along the lines, especially as ESG, as sustainability also sort of grows into becoming more of an integrated practice in business, not just startups, but across business sectors, you see that already as the value add of these startups. And then you will actually see, there's the double impact, right? Because you see that they're doing good in their business, but then you also see their measures of impact on, let's say, the products and services that they are offering. And if they are actually serving, let's say, a certain demographic or let's say an underserved community that adds to that value, then obviously it is, as you called earlier, a green flag. But at Quest, actually, how we have sort of turned our approach towards more intentional, considerations for impact investing, or at least even just certain verticals. We work closely with existing programs or even launch and co-build programs with other stakeholders and partners that looks into these areas. So whether it's climate tech or green tech, and then you have, agriculture and food security or decarbonization. So having these, how would you call this, like filters, allows us also to look into, these specific spaces and also work with domain expertise from, let's say, industry. Because of course, since we are sector agnostic, we might not actually know everything about, all these different sectors, but you see that their key measures are actually there, and we see that being validated in their own industry or in their own vertical. So that gives us, again, added to our due diligence, okay, these are the measures that being used also in your industry, and as a startup, you're also being actively monitoring or at least using those as your own success measures. Then that helps us also evaluate and assess you as a startup.
Okay, and over to Wern, you mentioned Malaysia is aiming to be net zero by 2050. That's the big goal. What's driving that goal? I mean, it's not just because people want to hit that number, but it's because it makes Malaysia a more attractive investment destination. Perhaps companies from the West or from wherever make that a requirement, and they're like, hey, if you do that, we'll give you more money, that kind of thing. Talk about that a little bit.
I mean, that's not wrong to start with. I think the intent must be right for a lot of startups to look into their ESG journey. I think start with the right intention, and that's where your business will flourish, and you have a balance between your earnings and your impact as well. And in terms of Malaysia, I think being part of COP and COP29, the last one, and you have to make a pledge. And I think Malaysia is quite unique because we have a lot of natural resources. We can actually offset a lot of the carbon footprint as well. We have a lot of great tech startups that can look into that. We have a lot of greeneries around Malaysia. So it's very easy for us to create the kind of carbon neutrality by 2050. And the government has made a pledge. And when they make that pledge as well, they actually introduce about a 2 billion ringgit kind of commitment into it. That's about 400 to 500 million US dollar into building this trajectory for our net zero, if you say, by 2050. They also look into providing roughly about 200 billion in terms of US dollar, in terms of creating a collaborative partnership between public and private into creating funds that could support any kind of impact startups. So they've put that commitment in, and they actually put in a fund of about 20 billion to support startups, primarily in social and climate tech. So these are some of the commitments that they made so that we can actually look into building that particular goal by 2050. So it's not just talk, but that conversation has been going. The fund is there. It's just that how are we going to deploy that fund? How are we going to put that fund into the right kind of startups as well? And how are we going to look into the impact and the measurement? So it's not about creating impact. Are we creating the right impact? How do we measure it? And that's very important. I think measurement comes in the space where there's many different ways to measure it, and we have to look into a way that we can actually measure it in a more responsible way, and I think that's really important.
Okay, very good. And maybe we can save some time for the two of you to share examples of successful startups that may not seem like your typical ESG sustainable headline startup, but they've followed some of those principles either on the back end or in the front end, and they've become successful as a result. Do you have any startups that you can share in recent history that can showcase that? So maybe start with April, then Wern.
Yeah, I mean, I'd have to say earlier we had the panelists of the unicorns early, and Carousel is actually one of our portfolio companies. And we were also having a chat before that, this trend of ESG and this talk on, measuring sustainable impact, et cetera, is quite, just recent. And with Carousel, it was already part of their purpose, right, or their business model. Way before circular economy was getting more mainstream or starting to get a head start here. And for them, they actually launched, I think late last year, their impact or sustainability report as a startup that actually looks into the circular economy more intentionally. And as Wern just said earlier, where is that impact? How are you measuring it? And how are you also communicating it also to your stakeholders and to your investors and your consumers, because having that sort of more publicly showcased impact allows more, more customers or even other VCs or other investors to say and, probably also join in this effort that we need to move capital towards startups like Carousel or these that are actually creating that positive impact. On the other hand, also, we also work in Singapore with a government agency that also invests in supporting social impact startups. We have had several cohorts also join that program, and these startups can come from early stage as well. And for them, these are like maybe fresh ideas that can turn into good business. And like you said, if it's good business and you're actually addressing, let's say, a market that needs your product or your service, then in turn becomes a commercially viable, but also even grow into that case. So I have other examples, but maybe Wern, you can also share.
Yeah, I mean, there are startups that start out with the right intent, meaning that they focus on sustainability, such as iMotor. We look into electric motorbikes so that you reduce the carbon emission. We have also like startups like Earth actually look into recycling or electronic components, so it's less harmful to the environment. We have Malaysia that looks into reselling all your electronic devices. So that businesses all start off with the right intent of sustainability. But we have traditional businesses as well, which there is an impact, but that is not their main business. Okay, one of our first investment from MAVCAP is actually Grab. Right? Grab is known around Southeast Asia. If you look into Grab, they are e-hailing platform, but they do create impact as well. Right? What is the impact? They create jobs. Right? People are working for Grabs, and there are thousands, come to millions of people actually works for Grab, so they are drivers. That create a social impact in that sense, right? So that impact is not really sort of like the center of attention for Grab, but that is a great social impact. The number of jobs that they created, especially during like, COVID time or economic downtime, people turn to that as a way for them to have a livelihood, and that is a great social impact towards any kind of economy or any kind of community.
One of my last questions is about frameworks for Southeast Asia. So for instance, in ESG, G stands for governance. Governance in Southeast Asia is still fairly immature, I would say. For instance, I know a lot of startups here in Southeast Asia generally don't follow the same corporate governance standards as, let's say, investors in more mature markets like a Japan or Singapore or the United States would expect. From Vietnam's perspective, I'm sure it happens in the likes of Malaysia and Indonesia. People don't like to pay taxes, and so they have a two-book system. And they'll still have a two-book system until being a Series A or even a B startup. And to most developed market investors, that's a huge red flag. So I guess my questions for you two is that, have you had to adjust the global standard for ESG a bit more aggressively in Southeast Asia, or had to kind of push it a bit more where startups just don't understand the need for those requirements? So maybe I'll start with Wern here and then to April.
Because I think the whole ESG, especially in the governance in this region as well, is quite nascent, and they're trying to get a hang of it in terms of sustainability. So it depends on the startups or the SMEs, if you look into it. What kind of business do they do? Where are they exporting their business to as well? And that's really important. Let's say if a lot of manufacturers are exporting to Europe, and Europe has very stringent ESG policy, and if you don't meet them, you can't export to those countries, right? So it really depends. So for Malaysia as well, we export to Europe quite a lot, and we have to meet their requirement. If we don't, we lose out in that sense. So it really depends. And of course, I understand the double taxation thing, so it depends on where tax regime is more attractive, right? We can't blame it. If you put into startups, you want to have the best tax regime isn't it? So I think around this region, Singapore has a very good tax regime. I think what we need to do is to streamline some of these tax regimes so that the governance part is met. It depends on also where your business operates and where are you exporting to, and look into best practices. And also, I think I'm just talking about Malaysia itself, and we adopt UNTP standards into our sustainability framework. And that is international standards already. And a lot of companies in Malaysia are looking into international standards as well, so that we align ourselves to international trade. And a lot of trade these days look into your sustainability standing. Where are you in your ESG? And we really need to do that in order for us to be competitive. And recently, MAVCAP, it's already under UNPRI. I think that's a good step forward in terms for us to champion responsible investments as well. And we want to use that as our baseline for any kind of investment, especially in the impact scene.
Okay, and very good. And over to you, April. Different perspective, of course, from a VC.
Well, before going on a different note, same as MAVCAP, we have also joined in the community, right, in that network for the Global Compact Network, as well as UNPRI for responsible investment. And I guess to maybe dig deeper into that, in terms of the ecosystem, like the venture capital and the startup ecosystem embracing ESG or embracing sustainability, I think there is that need for more VCs to really be part of it in terms of their intentions or in terms of their investment thesis. But I think going back to that question earlier about what kind of impact you're making and maybe examples of startups that are probably not directly, addressing these issues. Governance, I think, is that one area that applies or should apply to all companies, let alone to startups. And I think the role of VCs, especially like Quest, we come in very early. Even we do have a super angel fund, so to those small check sizes up until Series A. So we see the journeys of, let's say, just the founders themselves to them building the team. So the unique opportunity there is for them to actually create that culture of good governance from the get-go and not wait until they're already big and they actually have to make all these reports and all these things. Because when you're starting from the early stage, then it becomes more natural or integrated into their business practice. So I think that's the role that VCs can play into allowing startups or entrepreneurs to embrace, let's say, ESG, especially on the governance front. But of course, when you come to environment and social, that again depends on the sector they're in. But obviously, on the social side, it's how do you treat your people, right? How do you impact the stakeholders that you're in? It doesn't have to be a direct you are impacting a certain community, right? It's your team, your stakeholders, your customers. Are you paying your team fair wages and things like that? So these are the simple steps, and in the early stage, it's so much easier to adapt and change and improve. And hopefully when they mature, it becomes second nature, and then it's no longer like, oh, you have to push and change and become more sustainable.
I can attest that having good books from the beginning are much easier than trying to fix it later.
Of course,
so,
start off right.
Yes, definitely. Thank you so much. Well, I just want to be a bit mindful of time. We are 20 minutes late on this session, and I'm sure some of you want to head out for happy hour very soon. So I'll wrap it up there. Thank you so much, Wern and April, for your insights on ESG, social impact investing, and what the two of you are doing at your respective firms. So thank you so much. Please join me in thanking them for their time. Thank you.